So now let us look at partial exemption. But the partial exemption under service tax has been put under abatement scheme. This abatement scheme is under notification number 26 by 2012. Remember, notification number 25 by 2012, that is for mega exemption, where the services are fully exempt. And services under notification number 26 by 2012, these are services of partial exemption. This is also known as abatement scheme. Here the services are partly exempt and partly taxable, but treatment, to what extent Senvat credit is available, whether it is available or not, that has been clearly specified here. What about the fully exempted services? In the case of fully exempted services, you won't be getting any Senvat credit. Without Senvat credit, that is done. Here, in some cases, there may be Senvat credit available, sometimes in all input service and in capital goods, sometimes only on input service, sometimes only on input service and capital goods, etc. etc. How to take care of this? We have to learn, we have to remember, we have to read. So, for example, look at this table. You are able to see this. See, services in relation to financial leasing. Look at this. And we should also have updated knowledge where there is a change. Say, in case of financial leasing and hire purchase, including hire purchase. So what do you mean by financial leasing and hire purchase services in relation to, maybe you recall, it is under declared services. Do you remember? Declared services? Say, first declared service is renting of immovable property, next construction services, and next, what about other services? Renting, construction, and IPR services, intellectual property rights, temporary transfer, okay, temporary transfer of trademark, etc., and also information technology related online services, and again agreement to do or not to do something, that is also a declared service, and again hiring services other than without transferring of right to transfer the goods. It is not a hire purchase. If it is a hire purchase or installment, it comes under sales tax. You are not giving effective control. Please go through the declared services once again. So that is another declared service, and the next one is activities relating to hire purchase. So what do you mean by activities relating to hire purchase? For example, somebody, financial services, is giving some property, some goods or say machine, equipment, etc. on hire purchase basis, and here he is charging, say, documentation charges, loan sanction charges, inspection charges, like that. So these are charges incidental. Similarly, he is also charging obviously interest element, because hire purchase price minus cash down price, the difference is interest. So interest. These are all charges relating to activities connected with hire purchase or leasing. And in that, all other services are taxable at 100%, whatever be the amount charged. For example, documentation fees collected by the financier. Whole amount is taxable. But what about interest? Here, for interest they have given 90% abatement. Means only 10% is it is taxable. So here, you see here, 90% abatement is available. Means service tax is payable only on 10% of the interest element. For example, 50 lakhs is the hire purchase price and 30 lakhs is the down payment price, cash price or cash down price. So what is the difference here? Because you are paying in installments, the difference of 2 lakh rupees, 15 minus 13, is paid in installments. And interest element is 2 lakhs, right? But that amount, interest element, it is not taxable fully, only 10% it is taxable. Out of 2 lakhs, only 20,000 rupees, because that is 10%, that is taxable. So 90% abatement is available. So here you see, what about same VAT credit position? There is no restriction. You will get same VAT credit on input services and capital goods, right? So make sure when you get a question, practical question, you should know this. Only 10% becomes taxable. And similarly, look at transport of passengers by rail with or without accompanied belongings. Let me tell you at the outset. Earlier, there were different rates were available. Now, what they did, they have made things uniform. How they did transport by road, say GTA, goods transport agent services. Number two, transport by rail, transport of goods by rail or passengers by rail, or internal transportation through sea waters, inland waterways within the country. The transportation by waters, sea waters or otherwise, is within the country. That is exempt, that was in the negative list practically. Wherever it is otherwise taxable, these have been made uniform. Uniformly, they have given 70% abatement, means only 30% is taxable. See, in that you see transport of goods by rail. Okay, transport of goods by rail. Here, no sale VAT credit on input service or capital goods. And similarly, transport of passengers by rail with or without baggages. Here also 70%. No. Uniform. Of course, only as far as air is concerned. Transport of passengers by air with or without accompanied belongings. In this case, if it is economy class, it is 60% abatement. Other than economy class, it is 40% abatement. Economy class, 60% abatement is available. Other than economy class, only 40% abatement is available. This is special, not 70% case. But what about same VAT credit? No. Same VAT credit is not available. But same VAT credit is available on input services alone. Input services only, not on inputs, not on capital goods. Please remember this, because you have to learn a lot under service tax. This is more a memory test. And then, renting of hotels, inns, guest house, etc., campsites or other commercial places meant for residential or lodging purposes. I've already told you, this is under mega exemption. How? If the amount is less than 1,000 rupees per day. If the amount, room rent charges we can say, if they are below 1,000 rupees, and that is exempt. If the renting happens to be a residential property given for residential purpose, it is in the negative list. So that is under negative list, renting of residential property for residential purpose, 66D M for Makan. Remember? That is fully exempt. That is under the negative list. Notification number 25, but the item number, entry number 18, services by a hotel. Services by a hotel, inn, guest house, club or campsite by whatever name called, eating joint or mess, for residential or lodging purposes. Purpose may be residence or lodging purpose. Having declared tariff of a unit of accommodation below 1,000 rupees per day or equivalent. Declared tariff. If it is below 1,000 rupees, it is totally exempt. But if it is 1,000 rupees or more than 1,000 rupees per day per accommodation, then it falls here. Entry under item number 5. So for this, abatement is 40%. Means the service tax is payable on 60% portion. But actually, declared tariff may be 1,000 and above, but actual collection may be less than that. For example, in a particular case, they have declared a tariff of say 1200 rupees. 1200 rupees they have declared. Okay? But they are collecting only 800 rupees. So service tax is payable on 800 rupees. How? After deducting 40%. So on 800, value shall be taken as 60%. So 480. Service tax is payable on 480. You understand the meaning? Right. But what about send-back credit? On input it is not available. On input services it is available. Capital goods no. So we'll go to the next one. Transport agency. Here also it is 70%. I have already told you. Goods transport agency, GTA services. Remember, earlier it was 75% abatement. Now it is 70%. Of course, send-back credit is not available, but at the same time, service receiver need not prove that the service provider, goods transport agent has not taken any send-back credit. But practically, if you see, send-back credit is not taken. Send-back credit, it's not possible for GTA to take send-back credit. Or what are the elements on which you will be paying tax and taking? So it is simply, if you take services from a GTA or GTA as the case may be, service tax is payable on 30% of value. What is the value? How do you take the value? Value is amount of freight charged through amount of freight charged in the consignment note. Value of freight charges. On value of freight charges, it is service tax. But after deducting abatement, only 30%. Earlier it was service tax was payable on 25%. Now it is on 30%. Done. So you see uniformly railway, transport by railway, say goods transport or passengers transport, it is abatement is 70% fixed. Okay. And here in goods transport agent by road, it is here also it is fixed. Only by air, if you have any transportation, say for economy class and no other classes. For economy class, 60% will be abatement. For other classes, it is 40%. Only the difference that you see. Services relation in relation to chit fund, you know this. Earlier, 30% abatement was available. Now, no abatement. On the entire amount, service tax is payable. Earlier also, send-back credit was not available. Even now, say send-back credit is not available. Send-back credit is not available. But what about the position today now? Suppose now chit fund services are totally taxable. You are getting my point? When they are totally taxable, automatically there is no restriction on send-back credit. There is no restriction, send-back credit is automatically available on all fronts. Okay? So don't read this way. Send-back credit is available if it is chit fund company, because chit fund company services were partly exempt earlier. Now in the latest, as per the latest budget, no abatement is available. The entire amount of chit fund collection means the amount charged by foreman of chit funds, that is taxable. Total amount, when the total amount is taxable, and automatically send-back credit is available. Renting of any motor cab designed to carry passengers, motor cab. So 60% abatement is available. Service tax is payable on 40%. Okay, send-back credit on input service taken from another service provider of a motor cab. You should read this. By way of renting a motor cab available. If you take services from another motor cab operator, that amount you pay to him, you can take send-back credit. And transport of passenger with or without accompanied belongings. by contract carriage other than motor cab or by radio taxi. Other than motor cab or radio taxi, because motor cab is carrying small number of people. Contract carriage is carrying more than 12 people, obviously. So motor cab may be something like radio taxi. It can be a four-wheeler, but here it is a larger one. It is like a bus. So of course, abatement rate is same and no Senvat credit is available. Next, let us see other abatement here. Transport of goods by vessel. I have already told you. Recently they have made everything uniform. Goods, transport of goods in a vessel, which is taxable. Transport of goods in a vessel. In a vessel, it is again abatement is 70%, and no Senvat credit on input services or capital goods. So with this, you see uniformly, it is equally uniformly applicable if it is by rail, it is goods or services, and if it is GTA service, rail, goods and service, goods and passengers, and goods transport agency, and transport of goods in a vessel. For all these things, uniformly it is 70% abatement and no Senvat credit at all. Please remember. Now it is easy to recall and remember. Others. Let us look at others. Say tour operator. This time there is a question also. There is a practical question in November 2015 attempt. Tour operator. So this tour operator service, varieties of services is providing. There would be sometimes bundled services also. Suppose he is conducting tours in relation to package tour. One is package tour. Okay. So on package tour, abatement is 75%. Means he will be paying tax only on 25%. Okay. But what about Senvat credit? No. Because he is paying only on 25%. He should not be allowed. That was the policy of the government. So no Senvat credit scheme. Credit on input service of another tour operator allowed. But at the same time, another tour operator, credit of another tour operator, because suppose this tour operator has taken services from another tour operator, and this man has to pay service tax there. So whatever the service tax he pays from this side, that constitutes a Senvat credit that he can take. Otherwise, for whatever he is providing, a service called package tour, no Senvat credit is available unless he receives services from other tour operators. And similarly, solely accommodation booking, only booking accommodation. Let us assume he is booking only accommodation, nothing else, nothing more. Here abatement is 90%. In two cases you find 90% abatements. One is activities relating to hire purchase and leasing, where you get 90% abatement and 10% taxable. Here also, a tour operator, he is booking only accommodation, nothing else and nothing more. It is 90%. But what about others, if any? If he does anything other than the above two, neither package tour nor booking of accommodation, something different or something else, for that the abatement rate is 60%. Please remember this. Okay? So obviously no Senvat credit wherever it is. But activities relating to hire purchase, etc., Senvat credit is, yes, was available there. Here, no, Senvat credit is not available. So further, accommodation. So for example, accommodation, a hotel is providing accommodation and also what we can say, conference facility. Food is supply of food catering, outdoor catering facility. So it is providing catering facility right here. So stage setting, accommodation, and catering. If both are done, that is also to be taken care of. So that is not to be considered as a bundled service. It's not considered as a bundled service. So you have to read, you have to take care of all these things. Together you have to learn from the material also, please you do it. And we will get practical questions based on this. Let me do some practical question based on this so that you will get an idea. Because practical application is all important. Whatever you read, you will be able to digest, you will be able to retain only if you are able to do practice. If you are able to do some practical questions. So in the recent examination, the question, look at the question. I'll write down the question. It is a mixture of both mega exemption, of course, knowledge of negative list is also important, and also partial exemption put together. Normally questions will be coming as a combination. कहता है कि says question is A, B, C, D. A, it says premium collected on IRDA approved microfinance schemes with the sum assured. IRDA approved micro insurance schemes with sum assured between 75,000 and 1 lakh. So the sum assured, this is an insurance scheme, and recently this has been added. I think entry number 26A, mega exemption. Let me tell you that if this is under mega exemption, 26A, services of life insurance business, entry 26A, services of life insurance business provided under the following schemes, they are exempt. What are they? Janashri Bima Yojana. Read out for your benefit. Aam Aadmi Bima Yojana, life micro insurance product as approved by the Insurance Regulatory Authority. Okay, where having maximum amount of cover of 50,000 only. So here covering maximum life risk of 50,000. You see this? Got it? So what is the question here? The question here is, it says insurance cover. See, question has been very cleverly framed. Premium collected on IRDA approved micro insurance scheme with sum assured between 75,000 and 1 lakh. So it is between 75,000 and 1 lakh. Means exemption is not available. Up to 50,000 rupees risk covered, it is exempt, fully exempt, but it is 75,000 and above, not covered under the exemption. So they have given the amount as 1,25,000. So this is taxable or no. Finally, taxable means non-exempt, you can say. So no. So this is taxable. And second part, they say service Indian tour operator. Part B. An Indian tour operator. Listen to me carefully. An Indian tour operator receives service fee for conducting tour outside India for Indian tourists. Tour outside India, but for Indians. A tour operator conducted tour outside India for Indians. This is a very typical one. So you have to relate. A tour operator means a tour operator, an Indian tour operator, conducted tours outside India for Indians. Somebody like Raj Travels or Tours and Travels provides tour travel services. Say he will take Indians to Bangkok and also Dubai, and he will provide all the facility tour. He will have the touring facilities, and he will bring them back. So Indian is providing tour travel services to Indians, but tour travel services are outside India. Whether it is governed, the amount here given is 225. Whether this is covered under, whether this is covered under mega exemption or not. This is not covered anyway under negative list. So we have to check whether it is covered under mega exemption. If it is under mega exemption, taxable but no tax is payable because it's fully exempt. And if it is not there, we have to see whether any abatement is available. First of all, we have to see mega exemption. Yes, for in mega exemption there is a provision. But in what way that provision talks about an Indian tourist providing tourist activities, tourist services to foreigners outside India. So an Indian providing service to a foreigner in a foreign destination. Service is provided in a foreign destination, and service is provided to a foreigner, of course by an Indian. So to this extent it is exempt. That has been given. Let me give you the entry number 40, I think it is 42. Entry number 42. So entry numbers also you have to remember if possible. Under entry number 42, you are an Indian providing service to a foreigner in a foreign destination. Then it is exempt. I read out. Entry number 42. Services provided by a tour operator to a foreign tourist. Tour operator to a foreign tourist in relation to a tour conducted wholly outside India, not even partly. Wholly outside India. But in this case, tour operator has provided wholly outside India, but not to foreigners, but to Indians. So this becomes taxable or not? Obviously, this is taxable. This is taxable also because if you look at POPSR, place of provisional services rules. Place of provision of services rules, POPSR. Look at POPSR. What is Rule 8? What about Rule 8? Rule 8 of POPSR. Do you remember? Come on. Rule 8 of POPSR. It says, when the service provider and service receiver both are from India, both are in taxable territory. If both are in taxable territory, service provider and service receiver both are in taxable territory. No matter what, other things being what they are, irrelevant, and service is said to be provided at the location of service receiver. And this is location of service receiver, obviously it becomes taxable. So in this particular case, it is an Indian providing services to another Indian. So obviously it is services said to be provided in India. So service tax is payable. If this service receiver happens to be an outsider, that is a foreigner, then it would be attracting the provision under entry number 42 for mega exemption. Right now it is taxable. Okay, and other one, C, part C, consultancy service provided to government. Consultancy service provided to government for organizing water supply and sanitation to people in a village. Water supply, consultancy. It's a very tricky point. consultancy service for water supply. See, services received by government are under mega exemption relating to water supply, sewerage, etc. etc. By way of, if the service is a water supply service, if it is a sewerage or drainage service, etc., effluent treatment service, etc. But here it is a consultancy services for water supply. So this cannot attract mega exemption. So I read out. I think it will entry number 20, 21, 24, 25. These entry numbers are relevant. Let me give you the idea. Entry number service, entry number 25. Here it is consultancy services relating to water supply. The question says water supply, etc. So received by government. Service receiver is government. But it is consultancy services. Are consultancy services covered under mega exemption? No. You have to read carefully. Entry number 25. So here entry number 20. Entry number 25. Look at entry number 25. What is it about entry number 25? So this entry number 25 is talking about things like services provided to government, local authority or governmental authority. You know, all the three. By way of water supply, public health, sanitation, conservancy, solid waste management or slum improvement and upgradation or repair or maintenance of a vessel. That's a different issue. So here services by way of water supply, public sanitation. Is it talking about consultancy? These are not services by way of water supply. This is consultancy services for water supply. So obviously this becomes taxable. Mega exemption under entry number 25 is not available. See how much important each entry number is. We have to read carefully. So it is 4 lakh rupees. Obviously this is also taxable. RBI receives service from, RBI receives service from outside India in relation to management of forex. RBI forex management services from abroad, from outside. You know, this is under negative list. Look at 66D clause B. No, 66 clause B, it is talking about services provided by RBI. Sorry, look at this. Let me correct myself. Services provided by RBI is covered under negative list 66D B. B for RBI bank. But what about services received by RBI? Sorry, that is taxable unless it is exempt by specifically under a notification. So there is a notification 25 by 2012 mega exemption notification under which this particular forex management services received by RBI, these are exempt. So let me read out. I think it is in 40s. Yes, 41. Entry number 41. So entry number 41. I read out the service. In entry number 41, what they have mentioned. Let me read out. Services received by RBI from outside India in relation to management of forex reserves. Management of forex reserves. Consultancy, guidance lately. It will take guidance. So forex reserves management. This is governed by entry number 41, so this is exempt. See how much is the amount? Of course, not relevant. So it is 18 lakhs. But no, here it is no. because it is exempt. Entry number 41. It is governed by entry number 41. Let us look at other things. Tirupati temple provides accommodation services which has a declared tariff of a unit of accommodation 1200 per day of 100 units. See, recently there was a case, Tirumala Tirupati Devasthanam, Tirupati, Balaji. Tirumala Tirupati Devasthanam versus department. Here, in case of Tirumala Tirupati Devasthanam, they claim that we are a religious place, we are providing something on rent basis, so it should not be taxable. But the AP High Court held that as per the scheme of the service tax, the purpose is irrelevant, whether it is charitable purpose or religious purpose, it is irrelevant. It is renting activity, and renting activity becomes taxable because it is not governed by negative list. It is not governed by mega exemption because the amount here is below 1000 rupees, it is under mega exemption. But here it is 1200, tariff value, declared tariff value is 1200. Okay, so because the tariff value is 1200, how many units are there? 100 rooms. 100 units means 100 rooms at 1200. Now it is taxable. And the case is, I think, still pending with Supreme Court of India. Till then, whatever be the way Supreme Court disposes, till then, the Tirumala Tirupati Devasthanam agitated, they filed an appeal with the Supreme Court stating that we are a religious place and we are giving on rent means service tax, collection of service tax on this particular service is untenable. Finally, it is for the Supreme Court to decide. Till then, this holds good, this is taxable. So, 1200 units at 100 means 1,20,000. It is 1,20,000. Okay, so this is taxable. But to what extent, that's a different issue. Abatement, subject to abatement, because there is an abatement. And next, F, radio taxes. Now you see, radio taxes became taxable in 2014 budget. Earlier, radio taxes were under negative list. Now they are taxable, but abatement is available. Radio taxes are from non-air conditioned. It is to mislead. Air conditioned or non-air conditioned, it is irrelevant. Radio taxi is a radio taxi. So this is taxable for the purpose other than tourism. It makes no difference. If it is for tourism, still taxable. If it is not for tourism, even then it is taxable if it is a radio taxi. And it is 2,40,000. It is also taxable. But abatement, of course, subject to abatement. So let us look at this one, 1,25,000 service tax liability. Yes, it is taxable. Okay, it is taxable fully. Fully taxable. Okay. Next, second one, tour outside. This is also taxable, but to what extent the tour operator, if it is packaged tour, if it is a packaged tour, taxable to the extent of 75% only. If it is only booking accommodations, then abatement is 75%. No? Say we should be careful. So if it is a tour operator, subject to abatement. So 75% abatement means 25% taxable. Okay. If it is only booking accommodation, then 90% abatement is available, only 10% taxable. Now it is 25% only taxable. On 25% value, on 25% it is taxable. If it is purely booking accommodation means only 10% taxable. Done. And consultancy services, these are taxable. Fully taxable. And RBI forex management, non-taxable, means tax is not payable because it is affected by entry number 41. And 100 units of 1200, that is 1,20,000. So on this 1,20,000, service tax is payable, but there is an abatement. So what is the abatement they are enjoying? This Tirumala Tirupati Devasthanam, it has to pay RBI is their accommodation, Tirumala Tirupati Devasthanam. Abatement is available. How much abatement is available? Campsite, etc. 40% abatement is available. Renting of hotels, inns, etc. 40% is available. Abatement means it is taxable 60%. 60% of this, that is 72,000. On 72,000 service tax is payable. And radio taxi, again the same. You will be getting abatement, no? On radio taxi you are getting abatement. For the other than tourism, 60% abatement is available, 40% is taxable. So service tax is payable on 40%. Okay. So 96,000. So 96,000, if you look at 14%, something like that. Service tax is payable. 96,000 is the amount. On 96,000, you have to pay service tax, radio taxi. Done. So look at the questions like this. For this, obviously, no escape, knowledge of mega exemption, knowledge of negative list, and partial abatement scheme, that is partial exemption. Let's recent question. There is another question in the recent examination only. In 2015, this question appeared. This is from CMA. This is also in relation to negative list, mega exemption, and of course partial could also be there. So question is vacant land. Point number 1, vacant land used for given on rent basis. For this is all about renting. So vacant land given on rent for agricultural purpose. Agricultural purpose. Say 10 lakhs. Rupees in lakhs. Number 2. And rent to accommodation given rent on rent to RBA. It is 12 lakhs. Tell me, is it taxable? First one. So this is negative list, mega exemption, or partial exemption, or taxable. Mega exemption or partial exemption or taxable. So this is in the negative list. Vacant land for agriculture purpose. Look at 66D. I think D, clause D, agriculture D, DD, small d. So non-taxable. Rent to RBI, this is taxable because you are giving on rent. Here RBI is a service receiver. So if the RBI is a service provider, that is under the negative list, all services provided by RBI. But if it receives, no escape unless there is mega exemption. Only forex reserves management is under mega exemption. So other services RBI is liable to pay. And 3, rent given on rent to a company for its corporate office. So it says 9 lakhs. Obviously this is taxable. You are giving some accommodation on rent to corporate office, some company. Temple hall, given for religious purpose. See, this is covered under mega exemption. In the starting itself, they have given entry number 5, 5 years, somewhere like that. I will read out. If a premises of a temple or religious place is given for public purpose or religious purpose, etc., that is governed by mega exemption. Tirumala Tirupati Devasthanam people might have been trying on these lines only. So let me read out that provision. Entry number 5. Services by a person by way of renting of precincts of a religious place meant for general public or conduct of any religious ceremony. Religious purpose or public purpose, general public, meant for general public or conduct of any religious ceremony. Whether marriage is a religious ceremony, that was also an issue. It went up in some courts, and some high courts they said marriage cannot be treated as a religious function or religious performance, religious ceremony, so service tax is payable. But different state high courts give different interpretations. So if here they have clearly mentioned that it has been given for religious purpose, general public or for any religious ceremony. So it is religious ceremony or religious purpose. So whatever be the amount, of course it is not so relevant. This is under mega exemption, entry number 5. So 0.25 means 25,000. But anyway, mega exemption. And building in USA let out, very good point. I read out, I also write. Building let out in USA. Building is in USA, let out to a person in Kolkata. The receiver of benefit, the receiver of service is in Kolkata, and building in USA let out to T of Kolkata for use as hotel. Rented, you have some building in USA and you have rented it to a man from Kolkata as a hotel, and the service provider is an Indian, obviously. It's a limited company. Service provider is an Indian, and here service receiver is in Kolkata, but the property is in USA. Both belong to India, but the property is located, fixed property located in Kolkata. And for this they say 30 lakhs. Whether it is taxable or not. Again you see the principle given under POPSR, place of provision of services rules, rule 8, which says where the service provider and service receiver are located in taxable territory and the service is said to be provided in at the location of service receiver. In this case, service is said to be provided in Kolkata. That is a taxable territory. So this is taxable, even though property is located outside India, because both are located in India. So rule 8 overrides the principles given in rule 5, 6 and 7. 3, 4, 5, 6, 7. It will override. It will automatically override rule 3, but it will also override 4, 5, 6, 7. Because the later the better. So as per rule 8, it is taxable. Read POPSR Rule 8 once again. Next, a house let out, house let out to students for residence, for residential purpose. This is 6 lakhs. This is obviously renting of residential property for residential purpose. This is in the negative list. No tax is levied. Renting of residential property for residential purpose. That's the reason why it is not. And rent given on rent to higher secondary school. Higher secondary school means up to 12 o'clock, up to 12th standard, that is 24 lakhs. They have rented, they have given some premises on rent to a school, higher secondary. Is it governed by any mega exemption? Is it governed by a negative list? No. Services provided by educational institutions, they are under the negative list. This is up to higher secondary in the negative list. But here service receiver, the school is a service receiver. And service receivers services, they are also under mega exemption. But under mega exemption, I think 9, 10, somewhere around that. Services provided, entry number 9, right. So look at entry number 9, eligible institutions. Means educational institutions which are enjoying the benefit of negative list, which are eligible for negative list. So if they receive or provide some services, they are also in the, they also enjoy the benefit of mega exemption. What are they? For example, if they provide any service, any type of service to SFS, you remember, staff, faculty or students, right? Any service, no qualification, all services provided by them to, because higher secondary school is eligible for negative list. So staff, students and faculty, that is in mega exemption. And but what about services received by them? Here it is a case of service received by them. So service received by them, TCS AC, AE. For example, transport of students, faculty, staff, any service is received by education institution by way of transportation of their staff, students or faculty. But here it is renting, that is not covered here. Service relating to admission or examination, but this is not relating to admission or examination. So now this is taxable because this is not covered under the mega exemption also. You have provided accommodation, you have given some accommodation on rent to educational institution. Now, even though it is under eligible under negative list, it is not there. Next, rent to, okay, guest house. Guest house. Look at the guest house. Per day, per room per day, rupees 500. It is 1.5 lakh. So is it taxable? No. Because below 1000, less than 1000 rupees per day, any rented premises. So that is governed by mega exemption. Right now we have been looking at it. It is governed by mega exemption. So this is mega exemption. Not covered. So not this, because residential purpose renting negative list, and this is mega exemption, and this is negative list renting for agriculture purpose. Then what is taxable? 12 plus 9, 12 plus 9 plus uh, 30 plus 24, that's it. 50, 60, 70, 50, 60, 75. If we take it as inclusive, let us take it as inclusive, then 14 divided by 114 into 75 lakhs. This is the service tax. For May attempt, Swachh Bharat Cess is not applicable. For November attempt, Swachh Bharat Cess is applicable. Where Swachh Bharat Cess is applicable, the tax will be 14.5 divided by 114.5 into 75. Got it? So, like this we have to read mega exemption, and we have to read abatement scheme, that is under partial exemption scheme, notification 26 by 2012, and of course negative list. So briefly this is the information. What we do is, next we will go for reverse charge mechanism also. Of course there is not much to understand reverse charge mechanism. Under service tax rules they have given, and let us see the changes also. Okay. Pani, where is Pani? White page दे दो.
Wait, sir. Okay, sir.
So welcome back. Let us see reverse charge mechanism. This reverse charge mechanism, of course we know, we do at IPC level itself. So what is the origin? What is the basis? Let us look at the concept. First of all, I would like to give you the concept of reverse charge mechanism. After that, what I do is, I will take you to the legal provision and then the content. So conceptually, if you look at the scheme of service tax, there is a service provider and there is a service receiver. Like this. Okay? And there is a service receiver also. Service provider X and say service receiver Y. He is providing service here and he is receiving consideration. Because this activity is a taxable activity, here service charge plus service tax is forwarding. Suppose you are taking mobile services, Airtel, Vodafone, etc. So we are not only paying the mobile bill charges but also the service tax. Under service tax law, it is very much convenient for the government to collect all amount together from service provider, not from service receivers. Say maybe 10,000 service receivers are there in a particular location receiving mobile services. It is inconvenient for them, for each one of them to go to bank or other place and to pay service tax separately. So since they are paying charges to the service provider, they will, along with the charges, they will also pay service tax. And by collecting service taxes from all the customers, he is put together, he is paying. So it is convenient for the government to impose tax liability, the burden to discharge the tax liability on service provider, even though this is indirect tax and even though the tax is transferable, shiftable, right? The ultimate bearer of the tax is receiver or consumer of services, but at the same time, he is not himself directly paying the service tax to the government, he is paying through the service provider because it is convenient for the government to collect from the service provider. Similarly, under excise, it is convenient for the government to collect from manufacturer, not from the end user or the customer. But in some cases, it is inconvenient to collect from the service provider. Then what it does? Reverse. Reverse. Instead of collecting from service provider, it will collect directly from service receiver. So that is called a reverse charge mechanism. Why the government does it so? Because this is more convenient for the government. For example, you have received services from a foreigner and it is a taxable service. Singapore to India and it is a taxable service. For the government, it is convenient to collect from the Indian counterpart, not from the person from Singapore. So here, the Indian receiver of service, recipient of service is liable to pay service tax. Obviously, he has to get himself registered, he has to maintain records, he has to discharge the liability. So he is paying service charges to the party in Singapore and service tax he is discharging himself. That's what happened. Got my point? So this is concept of reverse charge mechanism, where it is convenient for the government to collect service tax from the receiver. It will do it. If it does so, it is called a reverse charge mechanism. Normally, it is service provider who is liable to pay. Whether he collects from service receiver or not, he is authorized to do that. Even if he doesn't collect from service receiver, he is still liable to pay service tax from his pocket because he is liable. But he is authorized to collect and pay. But where under reverse charge mechanism, service receiver himself is liable to pay service tax, not service provider. Service provider simply collects his amount and he will say, the tax amount you pay to the government directly, don't pay me. That is reverse charge mechanism because it is convenient. So where are the provisions? Even in excise, of course, there are reverse charge mechanism provisions. See, in the case of Khandasari molasses, buyer is liable, customer is liable, reverse charge. And articles of jewelry and ready-made garments, manufacturer job worker is not liable if they are manufactured through a job worker. Here it is raw material supplier or brand owner is liable. These are instances of reverse charge mechanism under excise also, where the customer is paying, where the receiver of service is paying, where the receiver of goods or buyer of goods is paying taxes. Okay? But what about the legal provision? Look at the legal provision. Section 2, 1D, remember this, of service tax rules, 1994. Service tax rules 1994, section 2, 1D gives a list of situations or cases, persons who are liable to pay service tax under reverse charge. Who is liable to pay service tax under reverse charge? That you have to find through this section 2(1)(d). But this reverse charge is of two types, partial and total. Total reverse charge means the receiver of service is liable to pay the entire amount of service tax, not partly. But partial reverse charge means only partially is liable to pay. But right now, only two cases of partial reverse charge mechanism, all others left, gone. only two. One is works contract service, under which when the non-body corporate provides service to a body corporate. In this case, the service provider is liable to pay 50% unless it falls under falls under this SSP exemption, and the receiver is liable to pay 50% if the receiver is a body corporate. It's a case of works contract, and the other one is renting of motor vehicles to a person not in the same line of activity, where abatement is not availed. So if you don't avail abatement, you have to pay on full value, but you will be getting full Senvat credit. That you know. We study under Senvat credit scheme also. If you don't want to avail exemption, okay, you pay in full and get full Senvat credit. Okay. Now let us see the cases of reverse charge mechanism provided under Rule 21D of Service Tax Rules 1994. Come on, let us see, let us look at this slide. Number 1, read here. Services provided or agreed to be provided by an insurance agent to a person carrying on insurance business. For example, insurance agent is there, LIC, GIC, etc. They provide a lot of service, provide service to insurance company. They bring parties, but insurance company is liable 100%, not the agent, because there are 1,000 agents and 1,000 agents go to bank and start paying service tax regularly every month or every quarter. That will be too much. On behalf of these people, insurance company itself will be paying. They will deduct from. They will not pay. They will pay only charges to the agent and amount to service tax. It will pay direct to the government. So similarly, services provided are agreed to be provided by a recovery agent to a banking company, financial institution, etc. So recovery, when the bank or financial institute is recovering amount through agents, recovery agents, then recovery agents are not liable. It is the bank or financial institution which is liable 100%. Similarly, mutual fund agent or asset management company. Earlier, this was under mega exemption. Now it is taxable. So, agent is not liable. Somebody is providing services to a mutual fund company, but the agent is not liable, but the mutual fund is liable. Similarly, service provider agreed to be provided by a selling or marketing agent of lottery tickets. Same is the case. These agents are many in number, but the company is one. Let the company pay for all the agents or on behalf of all the agents. That will be more convenient. That is the reason why the agents are not liable. Here the company is liable. So next, services provided by way of sponsorship. Some sponsoring services. Suppose Institute of Chartered Accountants of India is conducting some seminar, a workshop on GST, and for that it approached some companies, say Reliance Industries. Of course, Reliance Industries will not be so liberal. Let us say Hindustan Unilever sponsored the project, say GST, Hindustan Unilever. And now tell me, here sponsorship services are provided by ICA and the services are received by Hindustan Unilever, because Hindustan Unilever is highlighted or somewhere it is mentioned, some publicity, the Hindustan Unilever is gaining, sponsored by Hindustan Unilever Limited, like that they will display. So the receiver of benefit is Hindustan Unilever, the benefactor, the provider of the benefit is ICA. For that, Hindustan Unilever is paying some amount in terms of sponsorship. Here, ICAI, Institute of Chartered Accountants of India, need not pay anything. Under reverse charge, it is Hindustan Unilever, that is to pay. But there is an exception. If the company or body corporate or firm is located outside India, for example, Unilever Incorporation, and that is located in America, United States of America, then here ICAI has to pay. Direct, no reverse charge. Okay? Services provided by goods transport agent. You know, if the goods transport agent is providing service, if the goods transport agent is providing service to whom? In respect of transport of goods by road, so to consignor or consignee, this is a very big story. Let me have a blank page. GTA is providing service to, say for example, a firm, registered or not, or registered dealer under excise, who is known as FSD or SSD. Maybe it is possible for a registered importer. Importer is also a registered dealer. And similarly, a body corporate, a company like that, or he is providing service to a cooperative society, okay, or society under Societies Registration Act, 1860 Act, society under a non-profit organization, or a factory registered under the Factories Act. If GTA is providing service to any of them, okay, so in such a case, GTA is not liable under reverse charge, these people are liable. Then who is liable here? Who is, from whom it is collected? It is collected from the person who is paying freight charges. For example, Maruti Udyog Limited is dispatching vehicles to, say, Ludhiana, to a dealer, and it has contacted GTA, and GTA provided the transport agency. And here freight charges are paid by Maruti. Then Maruti is also paying service tax. Suppose to pay. Suppose the freight charges are paid by consignee in Ludhiana, then he will at the same time also be paying service tax. The person who is paying freight charges is paying service tax also under reverse charge mechanism if he happens to be any one of these categories. Now the question is very pertinent, relevant question. Recently there was an amendment, I think in 2013 or 14. Suppose the person who is under the contract, the person who is liable to pay freight charges happen to be in, what you can say, non-taxable territory, say Jammu and Kashmir. Then who is liable? So you cannot collect a tax from a person from Jammu and Kashmir. So obviously a reverse charge mechanism will cease to operate here, where the GTA himself is liable to pay service tax. Look at this. Say for example, in this particular case, let us say GTA is from Delhi and Maruti Udyog Limited is in Haryana, that is Gurgaon. And as per agreement, the goods are going to Jammu. Maruti Udyog Limited is sending goods to Jammu also. And as per agreement, this Jammu party is going to pay freight charges. When Jammu party is paying freight charges, obviously here you cannot collect, because it is non-taxable territory, you cannot collect service tax from Jammu party. So now no reverse charge mechanism is applicable. In this particular case, GTA himself is liable. Got it? So try to relate. See, you also read Rule 10, POPSR. Try to relate. You will have similar example under Rule 10 of POPSR also. Read transport of goods by road. Place of provision of services rules, right? You don't study this under IPC, but you have to study under in final. So read it carefully, okay? Services provided are agreed to be provided by an arbitral tribunal. If an arbitral tribunal provides some service which is taxable, if it happens to be a taxable service, then in such a case a tribunal is not liable, but the receiver of the services from the tribunal is liable. Similarly, services provided are agreed to be provided by an individual advocate or firm of advocates by way of legal services. Here I must tell you, it is under mega exemption, advocate services. So I must refer to mega exemption. So it is, I think, entry number 7 or 6, 7 or 8, somewhere around there. Mega exemption. So let me also tell you. Suppose you are an advocate. You are providing service to an individual, not a businessman. It is no service tax is payable. And an advocate is providing service to a business entity whose annual turnover is not about 10 lakhs. Here also no service tax is payable. It is under mega exemption. And service is provided by a tribunal, or you are providing service to a tribunal, non-taxable. So it's like this, or an advocate is providing service to another advocate, or a firm is providing services to another firm or advocate. So interse, transactions, services interse by the professionals or professional firms, law firms, no service tax is payable. Okay? So if they provide to a commercial entity, business entity, that business entity's annual turnover is about 10 lakhs, then only service tax is payable. In such a case, it is payable under reverse charge. Let me read out mega exemption. Entry number 6. Mega exemption entry number 6. Services provided by an arbitral tribunal, arbitrator, to any person other than a business entity. They provide to any person other than a business entity. If they provide to a business entity, here it is under reverse charge. Got it? Here under it is reverse charge. Or a business entity with a turnover up to rupees 10 lakhs. Up to 10 lakhs, no service tax. Or if it is no business entity, no service tax. And second, service provided by an individual advocate. Individual advocate or a firm of advocates by way of legal services to 1. An advocate or partnership firm, no. Any person other than a business entity, no. Individuals, not a business entity, no. And a business entity with a turnover up to 10 lakhs, no. And third category C. Service a person represented on an arbitral tribunal to an arbitral tribunal. Represented on an arbitral tribunal to an arbitral tribunal. Tribunal to tribunal services. Tribunal to tribunal. It is under mega exemption. Other than that, it is taxable. So, you have to read entry number 6 along with this. So, whether an arbitral tribunal is providing taxable service or an advocate is providing taxable service, in that case they are not liable. The recipients of service are liable under reverse charge. Okay? Entry, item number 5. 5A. Services provided are agreed to be provided by a director of company or a body corporate to the said company or the body corporate. Director to company, not an employee. If the director happens to be an employee, no service tax. If the director is not an employee and the director is providing service and company is receiving services, for that company is liable fully These are all the cases of 100%. So the company is liable to pay service tax, not the director. Done? And similarly, services by government or local authority. If the services are provided by government or local authority, here any service, earlier only business support services were there. Now any services. You read this carefully. Any services. For that, government is not liable. The recipient of service is liable. Number 7. Services by way of renting of a motor vehicle designed to carry passengers to any person who is not engaged in the similar line of business. Who is not in similar line of business. ST being paid on abated value. If the service tax is paid on abated value, so after abatement if it is paid, it is a case of 100% only service receiver has to pay. Who is not engaged in similar line of business. I am transporter, you are also transporter. I am providing service to you. That is not covered here. But I am providing service to you as a transporter, but to carry passengers where it is taxable. Say for tourism purpose it becomes taxable, or for other commercial other than public transport then it becomes taxable. So in such a case, wherever it is taxable, the receiver is not in the similar business and the receiver is paying without paying on abated value, means after deducting abatement, is not paying on full value. In such a case it is 100%. But service tax is being paid on non-abated value. Non-abated value means full value. Means he is not availing abatement. In such a case, service provider is paying 50% and service receiver is paying 50%. It is a 50-50 case. Next, supply of manpower for any purpose. Be careful here. Earlier it was partial, now it is 100%. Manpower supply for any purpose. So it is payable under reverse charge. Receiver is liable to pay. Works contract. Works contract I have already told you. A non-body corporate, say an individual, a partnership firm, not LLP, an individual or partnership firm or sole proprietor providing service to a body corporate, company, corporation, etc. So in such a case, 50% is paying and 50% the receiver is paying. Only 2 cases of 50%, all other cases 100%. Next, a person located in non-taxable territory and received by any person located in the taxable territory. Receiver is in non-taxable territory, service provider is in non-taxable territory. Suppose you are in Delhi, you are receiving services from Jammu, or you are receiving services from Singapore, China, Malaysia, then you have to pay, that is 100%. And any service provided or agreed to be provided by a person involving an aggregator. The concept of aggregator is new now. Who is an aggregator? Aggregator has been defined. Aggregator is a mediator. He takes services from Mr. X and he provides the services, he forwards the services to Y through his website or through his premises in his name. Aggregator, he provides service, he forwards the services in his name and he will collect all the charges from the customer and he will pay here. So as an aggregator, if you receive any service from somebody and provide to somebody else, here you are liable to pay service tax for the receipt of service as the receiver. For example, Meru Cab. Meru Cab is an aggregator. He provides Wi-Fi facility in his cabs to customers who are traveling in their cabs. So he is drawing the service from Airtel. He is drawing services from Airtel. So Airtel is not liable to pay service tax here for the services providing to Meru Cab as an aggregator. Here Meru Cab is liable to pay. both as a service provider and also as a service receiver. For the services received from Airtel, aggregator Meru is liable to pay. Okay, so this is briefly about a reverse charge mechanism. Okay.